Hello, this episode of the Weekend Chart Prep is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tools that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. The music done ran out on me. The music ran out on me. How y'all doing, man? How y'all doing? Good afternoon. I hope you're happy. How y'all doing, man? If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Rania Grande. That just means big spot if you don't hablo Espanol. And this is another episode of the Weekend Chart Prep. Actually, the Weekend Chart Prep. Not going to be before you long today. Just going to pop in here really quick and update my charts, get ready for next week. If you're interested in becoming a more efficient trader or investor, as you saw in the introduction video, I got a course that I put together for $69.99 called the Smart Money Manuscript. It's the first link in the description below. It's only $69.99. Amazing course, I think so. Right, starts from the basics, just basic money principles, goes all the way through covering my understanding of the advanced ICT concepts, talks about trading, investing, options, futures, back testing, so you go through a lot of stuff, man. And not only that, just for $69.99, every second Saturday, you get a chance to talk directly with me during a live stream at 12 p.m. Eastern Standard Time for the Smart Money Mentorship. No extra charge. You don't have to do anything extra. Just show up every second Saturday at 12 p.m. Eastern Standard Time inside the live stream channel, inside the course. Amazing value. Now, last Saturday, my oldest graduated from college, and we did not do the Q&A. So we will be doing it this Saturday, on the third Saturday at 12 p.m. This is the only we're not changing it to the third Saturday. We just moved it because, yes, my baby's graduation was much more important than doing the Q&A. If you don't like it, I don't care. Yes. Now, so we will be doing it this Saturday at 12 p.m. Eastern Standard Time. Okay. Okay. Got that. Got it. Speaking of links below, the third link below, I think it is, Apex is currently doing a 90% off sale where you can get any of their evaluations for like $19.60. And if you buy an evaluation between like 100,000 or less, if you pass it with before the 16th, the PA activation fee is only $65 for the lifetime. So you'll be all in and like $84.60 on any account size that's 100,000 or less. And I think the activation fee on the bigger accounts is like 125 up until the sale ends. So use my link in the description below if you're ready to, take your stab at eval accounts. Shout out to gang members who have not only took their stab at an eval, but they have made it to the funded stage. Man, shout out to gang members that made it to the funded stage. As we all know, one particular gang member who I told him, take your payout or I'm gonna give you a fat lip. Hopefully they took their payout. They made it to able to get a payout to get your money, man. This game is not designed for you to grow these accounts. This game is designed for you to make money, take money, make money, take money, make money, take money. Right. So hopefully they took that payout or that fat lip is still waiting. Right. But shout out all the gang members that's been spreading their little baby bird wings and going and paying for these challenges and passing challenges and getting payouts and making it to funded accounts and all of that, man. Y'all give it up for the gang, man. I'll give it up for the gang. Right. And no, this is not a what you call it? When they be telling people what to do. What's the thing? I'm having a brain cramp. What you call it, man? When you be telling people when to get in trades and get out of trades, what you call it? What do they call it? Erica, what are you doing inside the voice channel? Oh, she gone now. Erica, are you in here? Where's she at? Erica was in the. I saw Erica in the voice channel. I think that was Erica I saw in the voice channel. Signal service. Thank you. This is not a signal service, right? I couldn't think of what it was because this is not a signal service, right? What this is, we are a close knit, tight knit family of like-minded traders who just like Erica. Was that you in the voice channel? What you doing in the voice channel?
I hit the wrong button, Tim. My bad.
Oh, okay. I'm like, what's she doing over in the voice channel?
The notifications pop up on my phone, but then they look different when I get into the Discord to look at them on my laptop. That's all.
They just look for the red bubble. Look for the red bubble. If the red bubble is going to be wherever I tagged everybody at, it'll be a red bubble in the channel. Whatever channel I tagged it in, it'll be a red bubble there. Right. If you got unread messages, it'll be like a white bubble in that channel. But when I send out the back signal, it'll be a red bubble in whatever channel I put that information in, just in case anybody didn't know how to get right to whatever channel that I put the information in. I always look for that red bubble. All right. Everybody got it? Tracking. So, like I was saying, we're a tight knit family of like minded traders, and we just get together and talk about price action. Right? We go in there and we identify and look for those signatures that let us know what price gonna be doing. Yes. I only trade ICT concepts. You can trade whatever you want to trade. right? But when you come over here and you listen to me talk, don't come over here trying to sell me on what you do if you don't follow the ICT concepts, because you're only going to make me mad, right? I'm not trying to change anybody's mind. I'm just sharing my understanding of what Michael Huddleston teaches. It works for me. A lot of the gang members tell me it works for them. They say, hey, Tim, I like being a part of your community because you explain it clearer than he does. I beg to differ. I think he explains it very well. But since they like the way I explain it, they hang out, they come through. That I can't change their opinion. So you're not going to change mine and make me think that your chart patterns and your trend lines and your stochastics and your EMAs, and you're not going to make me think that's better. You know why? Because I have traded that. I don't think I haven't traded with chart patterns. I've never been a crouching dragon, hidden monkey type trader, right? But I've traded trend lines. I've traded indicators. I've traded EMAs. I've traded SMAs. I've traded just guessing. I've traded everything except chart patterns. And the ICT concepts are the most accurate, most effective, most profitable thing that I have ever used in my entire trading career. Now, and yes, I am a full-time trader. I do not go punch a clock. I sit at my desk right here, typically from like 8:45, 9 o'clock-ish in the morning up until about 11. Right. If I get a trade before 11, then I might just sit here and watch YouTube videos and just because I just like to watch the candles print until about 11 or so. If I don't get a trade, if I don't get an entry around by 11:30, then I don't seriously think about trading that day. I might come back in the afternoon to see if it presents something better. But hey, this is my job now. This is my job now. Well, Tim, if you make so much money trading, why do you sell a course? I'm just trying to help more people. Ain't nothing but $69. I could charge well beyond that. Could charge a lot more. Let's take a poll. No, I ain't gonna take a poll. Right? Is there anybody here who has taken advantage of the smart money manuscript? Is there anybody here? If you have taken advantage of the smart money manuscript, put a one in the chat or say yes if you're inside of the Zoom.
Yes, I have.
Okay, we got us a yes. Right. For anybody who has taken advantage of it, honest to goodness, no glazing, no nothing. In your humble, honest opinion, is the course itself, without the fact that I do monthly Q&As at no extra charge, is the course itself worth more than $69.99 compared to other courses that's out there?
Absolutely.
We got to absolutely. All right. This is unrehearsed. This is just, I call them, I'm a straight shooter. If you don't like it, say, nah, I've seen stuff that give way more value for less money. I'm a straight shooter. But I personally believe, right, because I've invested in courses. No knock against anybody that sell courses. People laugh at me all the time because they say, Tim loves showing that plaque, right? Because if you see this plaque right here, you know how much I spent for this course. You know how much. You say what?
I got a plaque too, Tim.
I ain't trying to knock nobody, right? It's for somebody. It wasn't for me. It wasn't for me. I spoke on why it wasn't for me in the past, right? But it wasn't for me, and I ain't knocking nobody. But I can tell you how much I have spent for courses and what I wanted to do. I want to create something of value that anybody could afford, right? I wasn't trying to create something to sell for what I thought my time was worth. I wanted something of value that anybody could afford, right? And I want it to be a gift that keeps giving by dropping in every month and say, hey, how you doing? Do you have questions for me? Because I am the type of person who like to be, that's why I got a live stream channel, because I like to be able to go straight to the instructor with my specific question. I don't have time to be putting something in the chat and hope they see it 6 months later, hope they still keeping up with this video that they made a year ago and be able to answer my question. I like to be able to say, hey, I got this specific question. Do you have an answer for it? Right. And that's why I want to make it affordable, and I want to keep coming back and answering questions, because once you learn something, right, you have to know how to go and apply it. And without some type of guidance or mentorship, you may be applying it wrong, right? And we're trying to build a new Wakanda together, right? Tim, Wakanda is a fictitious place, right? Everything is a fictitious place if you want it to be. Everything could be a real place if you want it to be, right? There's infinite possibilities in your mind. Anything that you see, touch, hold today, it started out as a figment of somebody's imagination, right? Even that person in front of you started out as a figment, right? In God's great imagination. Said, okay, I'm going to make man in our image. And man was there. Now that man is here, men and women say, oh my goodness, I want to make a mini me. They get together. There's a mini me.
Nah, they don't do it like that. My daddy said, Punky, come here. That's the way that went.
They got a mini me. You know, everything starts with a figment of your imagination. That car you're driving, figment of your imagination. And it now it's there, right? So just want to continue to cultivate a community that believes in iron sharpens iron, right? If you are negative Nancy, please stay away. If you think you're better than everybody, please stay away. Matter of fact, don't ever come back to my channel again. But if you're a like-minded person, come over here and hang out with us, man. Come over here and hang out with us. I'm not ignoring y'all. I'm just looking over here to open up my charts because I just realized I don't have my charts open. And I didn't want y'all to have to sit through waiting for me to open my charts when I shared my screen. Okay. I'm turning on my fancy dancy. Who we got in here, man? I know we got Eric in here. I know we got Lump in here. I heard them talk. We got Mike Pence fly in here with Empire Traders. Empire Traders, you already know what I'm going to ask you. Give me a yes or a no.
Yes.
Okay, then. I feel good. We friends again, Empire Trading. We friends again. We got Yolanda in here. Shout out Yolanda. I'm glad her mute button working today. We got Shatter.
What you say, Tim? I didn't hear you.
I didn't say anything.
You said come off mute?
I don't know what you're talking about. I don't know what you're talking about. I ain't say nothing. I was speaking to Shatter. I've never seen Shatter before. Shatter, appreciate you for reminding me that it's called a signal service. Shatter, if this is not your first time tuning in to Tim's Tidbits, I jalapies, but I just don't remember seeing the name Shatter. Right? Welcome, Shatter. Now, I see a whole lot more numbers than I see names, but them the only names that I see, so that's all I'm going to say. Yeah, man. Let's get over here to the charts, and we're going to do a really quick weekend chart prep, and then we're going to keep it moving, man. Have y'all been like enjoying or getting edification or any type of aha moments or anything out of like the price action reviews, the chart preps, the tape readings, the pre-market analysis, has this stuff been helping y'all as of late? I've been really trying to unlock your mind. I've been trying to unlock your mind when it comes to seeing it in real time. Because I know y'all know I go through themes. I go through themes of like, okay, I focus on this, I focus on that, I focus on that. But I really been harping on how to see it in real time, how to plan for it in the future. Has anything been clicking for anybody? Is it, has the sauce been saucing? Has the chef been chefing? Huh? Has it? Anybody? No? Okay, all right. Well, I'll take that.
Yes, it's getting clear. And it's like I said, it keeps sticking because I can hear your voice sometimes when I'm looking at something. So it's helping a lot.
Well, if you hear a voice, that ain't me. That's just that crazy person in your head. What the voice sound like in your head?
Just stuff like, to be real, it really finally clicked that when I finally got it when you were saying that liquidity can be taken when you had those equal candle bodies. For whatever reason, they helped me see some stuff better because you'll be like, well, why did we stop right there? So it helps with like placing like profit targets and things like that.
Okay. That's what's up. Y'all give it up for Yolanda, man. Yolanda, one of the true blue gang members who be now all the gang members, I truly believe they put in the work to the best of their ability. But there are a few gang members like Yolanda, right? I'm gonna put on the spot right now. I know that she be putting in the work. And the reason why I know she be putting in the work, it ain't nothing but they ain't got no homework for you to turn in. When I be doing like the class participation, it just be stuff for you to look at. But with the questions that she asks and the stuff that she point out and be looking at, I know she doing the work. So y'all give it up for Yolanda, man. The only way to get better at this is doing it, man. If you don't do it, it will show when you get to pushing them buttons. If you don't do it, it will show when you get to pushing them buttons. Whoo, yes, it will. We're on the monthly chart right now, man. We're looking at a what's going on. November, right? It was a pretty bullish month. We had a large pullback, but we closed in the upper quarter of the candle's range. So that's like a bullish type candle. Yes, it's a down close candle, but that's like bullish order flow. We came to a discount, rallied back up into a premium. All right, that's bullish order flow. Okay, on that down close candle. And then December, we have opened up, we pushed up into a little bit of a premium. And then now we're selling back down, and we still have not much time before Christmas, right? We got a week, and then we got 3 days. Let me look at the calendar. I ain't gonna lie to y'all. I think we got 3 trading days next week, but let's check that. Let's check that. God dog it. Get out of my way. All right, let's check that. All right. So Christmas. All right. So Christmas, Wednesday, the equities close at 12:15. 12:15. So we close at 12:15 on Wednesday next week. So that's 2 full days. And then so there's no the market closed on Wednesday, right? The market closed on Wednesday because it said closed because the equities, the futures open at 6 p.m. at night and it closed at 12. So if it closed at 12, it's closing like after the London close, right? It's closing after London. So there's no New York session, right? So it's closed on Wednesday. And then it opens up again at, see, so yeah. Oh, Thursday. I'm looking for. I'm reading here. Okay, so then it opens at 5 Christmas. So it's closed. So Tuesday, the last trading day. Wednesday, Thursday, and Friday. Oh no, it's open on Friday. So it's open on Friday. All right. So it open, yeah. So it's open Friday. So we got Monday, Tuesday, and Friday. Right. So Monday, Tuesday, and Friday. Yeah, Monday, Tuesday, and Friday. Right. So market trading Monday, Tuesday, and Friday. Because it closed so it's closed Wednesday, closed Thursday, and then it's open Friday. So Monday, Tuesday, and Friday. All right. So we got it there. Now, just to reiterate, see here, say Wednesday, December 24th, it closes at 12:15, right? Meaning there's no trading on Wednesday, right? Because that close at 12:15 is for like the Globex trading for the Sydney, Asian, London, all of that. And then after the London closed, then it's closing up at 12:15. Right. Then it's opening back up. That's Wednesday. Then it's opening back up Thursday evening. So Christmas night at 6 o'clock, it's opening back up at 6 o'clock. And then it closed Friday at 5. Right. These are central times right here. So that's what open at 6. See, it's 1700. That's 5 central, 6 Eastern. And that's 4 Central, 5 Eastern, right? So Monday, Tuesday, and Friday are the only trading days for next week. Okay, so what that means is we have this week, and then we got Monday and Tuesday. So that's 7 days, 7 trading days left before Christmas, right? 7 trading days left before Christmas. And then we got 1, 2, 3. I forgot to look at New Year. I'm sorry, y'all. I forgot to look at New Year. Why did it do that? Why didn't it go straight there? So Wednesday, it closed at 5 on Wednesday, which is New Year's Eve. Then it opened back up again Thursday evening. All right. So we got 7 days before Christmas. Then it's closed for New Christmas Eve and Christmas. Then we got that Friday, Monday, Tuesday, Wednesday. Then it is closed Thursday, and then it's open on Friday. So that's the new year. So we got 7 days before Christmas, and then after Christmas, we got 1, 2, 3, 4 trading days, right? So that's 11, 7, 8, 9, 10, 11. So that's 11 trading days we got left in the year. No. I'm sorry. Yeah, 11. So 11 trading days we got left in the year. 5, 6, 7, 8, 9, 10, 11. Yes, that's right. So we got 11 trading days left in the year. All right. I know that took a long time, but we got there. I know that took a long time, but we got there. Yeah, man. Yeah, I'm proud of myself. I did that math. I got that math together. I got that math together. All right. So let me move y'all out the way real quick. Okay, dope. Now, this is our monthly chart we're looking at here. The only thing we're looking at on the monthly chart is the high to low, and then that wick of November. November's discount wick. Our monthly high, our monthly low, right? So that's the November high and the November low, right? November low rests way down there at 23,904 and a half. And the November high rests up there at 26,266 even, right? And then we got a discount wick for the month of November, right? Those are the discount PD arrays that we're watching. Just the wick. That's the only discount PD array that we're watching, right? That is all we are watching on the monthly time frame, right? And right now, that's all we watch on the monthly time frame, is because we've expanded beyond this balanced price range here, right? We left the balanced price range, right? So leaving the balanced price range, this fair value gap right there, we wanted to see that act as a breakaway gap. Why do we want to see that act as a breakaway gap? Because that right there is our true fair value gap, right? That's our fair value gap. You say, Tim, there's a fair value gap below it, right? Yes, there is a BISI right here, right? There is an inefficiency right there, but we're not looking at that as a fair value gap, right? Who can explain to me why we're not looking at this BISI right here on the month of May as a fair value gap? Why are we not looking at that as a fair value gap? We're just looking at that as a regular buy side imbalance, sell side inefficiency. We're just looking at that as a regular inefficiency. Why aren't we looking at that as a fair value gap?
Probably because it's in that balanced price range.
Yes, it's inside of all this efficiently delivered area right here. So price has been efficiently delivered in all of this area right there. And when we get here and we start to leave this area right here, we've only offered buy side delivery as we're leaving. We haven't offered any sell side delivery. So this is an area where there's a gap in fair value. We haven't like offered sell side delivery. So this is an area that's lacking in fair value or still offers some type of fair value, right? All of this right here is a balanced price range. So this inefficiency there, that's not a fair value gap. It's just a buy side imbalance. Okay, that's just a buy side imbalance. Okay, so but leaving this area, right, when price is exceedingly bullish or exceedingly bearish, right, once we leave a balanced price range, we don't want to see price go back down in there. We want to see this be used as a breakaway gap, which we did right there, right? The month of August did not trade back down into there at all, right? Even if we would have touched it right there, even if we would have traded down, we don't want to see bodies disrespecting the consequent encroachment of that area, right? We don't want to see that, but we didn't touch that all, act as a breakaway gap, right? Then we came here, right? And we expanded up again. Okay, so now we're getting up here where we're getting a little long in the tooth and we're getting like deeper retracements now, right? We're getting deep. And not only are we getting deeper retracements, right? When we look at, we don't want to see anything coming down here. We want to see this act as a balanced price range, right? When we come here and we go from the highest high and come all the way down to right there, right? When we're leaving this balanced price range, right? On this monthly time frame, we came back down to a discount, right? We came back down to an area of discount. We came past the area of fair value when it comes to this expansion leg right here. We came back down into a discount, right? So now we've created a balanced price range, we've expanded, and we've retraced back down into a discount. Where does smart money buy? Smart money buys in a discount. Where does smart money buy? Smart money buys below lows, right? And we're seeing discount sensitivity. Uh-oh, I deleted that on accident. We're seeing discount sensitivity right here when we came down below that low and we came down into a discount of this range here. We get this discount sensitivity right there. Well, Tim, I thought you say you utilize the candle that leaves the balanced price range. There ain't nothing wrong with that. If we come to the candle that left the balanced price range, we still came to a discount. The only reason why I was using this candle right here is because, right, I don't want to see this traded to at all. So I don't even want to include it in my dealing range. I want to use it from this monthly low, right? But there's nothing wrong with you using, right, the candle that left the range. There's nothing wrong with that because the algorithm understands that. And we still came down to a discount using that candle that left the range, because guess what? That is the start of this run right here. All right, this is the beginning of the run when the algorithm gave you a sign that it's ready to go. Right, we came up here and we broke structure. Right, then we created an imbalance. Then we created an immediate rebalance. Then we expanded up again. Right, so this is the start of when the algorithm. That's when the elephant stepped in the pool. Right there. Right.
Hey Tim.
Yes.
So the green candle that's
it's 42 green candles on here.
I know, I'm getting ready to tell you which one. The
Just
one
give me a
that's
month. These monthly
I don't have my
candles.
glasses on. It's right above the 2025. So I guess that would be January green candle.
October?
No. All the way to the
You said
left.
right
to the
above
left.
2025.
Yeah.
Well,
Well, no, the months. No. I'm talking about down there at the bottom where the months are listed.
Michelle,
So
you said right above
July,
2025.
No, not there. Down at the bottom where it says 2020. Yeah, right there. Now
So
go down that
below-
green tank.
So below 2025.
Okay,
Here.
sure. Yes, that. Is that a breaker?
Hold on. Did you just tell me sure? when you the one who said above? Yeah, sure.
Because I was talking about the
It's a
2025
at
down
the
at the
bottom.
bottom.
At the bottom.
Oh,
You
here?
like
Yeah,
that right
there. Yes.
Oh, I keep saying it. You should have said on the timeline. I'm looking at 2025.
Down there where it shows all the months.
Right here. Right there.
Yes.
Do you want to know if this is a breaker?
Yes.
Let's see.
Is that a bullish breaker? Because in my mind, I thought it would be okay to trade down to that, even though you're saying, okay, that is a breakaway gap, which I get. And you said, oh, we don't want to see it trade down here to this breakaway gap. But in my mind, I thought that green candle would serve as a breaker and we would be okay if we traded back to the bullish breaker.
Yes, this is a breaker. Right. That's a breaker right there. Now, this is what you want to ask yourself, right? Is there this time frame and higher, is there a reason to come to that breaker? That's what you always want to ask yourself. No matter what PD array you're looking at, right? No matter what PD array you're looking at, in this case, it's this bullish breaker, right? For those who don't understand what it is, right? See, we're right here in this area, right? We got a low there, came up, made a lower low, came up, right? So this is our last up close candle right here. This is, matter of fact, one could argue to say that this is the breaker right there, because this is where that's last up close candle where we're going up. This up close candle is as we're coming down, right? But we'll just say that's the breaker right there. Okay, because notice when we're going up here, this is the highest high. This up close candle was made when we started to retreat. Right. So you always want to keep that in mind. That's why when we're looking at stuff that's inside consolidations, it start getting very tricky when you're looking for PD arrays. That's why I say don't try to look for PD arrays in consolidation. But neither here nor there. Does this time frame or any time frame above it have a reason to come there? All right. Does it have a reason to come there? Now, on this time frame here, okay, what do we know about what's going on in price? Like we said, this is a balanced price range. Okay. When you're above a balanced price range and you're bullish, right? You want price to be supported and stay above it. Right. When you're above a balanced price range and you're bearish, you want to see price cut through it. Okay. Balanced price range. Right. When price expands, right? When we get an expansion, what are we looking for? We're looking for a retracement at least to equilibrium, right? That's the minimum retracement that you demand out of price, right? A retracement to at least equilibrium. Why? Because equilibrium is fair value, right? You want to buy, you're looking for buying opportunities at or below equilibrium, right? So you're demanding that it at least comes back to equilibrium. All right. So on this time frame here, right now, fair value is there. Equilibrium is there. Why? Because this is a balanced price range, and this is our latest expansion leg. Whenever we talked about this with dealer ranges, you may not have been around because you was claiming that work had you busy and you were skipping class and playing hooky, smoking in the halls and all kind of stuff. But whenever we're looking at a dealing range, right? Whenever we're looking at a dealing range here, right? We're always focusing on the latest expansion leg of the dealing range for our trade and opportunities. Okay. And what does that mean? Right? We started here and started expanding up. Okay. Once we got outside of this balanced price range, we're no longer looking for price to come to a discount of this entire range, because now the algorithm has left an area that is done with. Right. So we've efficiently delivered this and left it. So now it's a balanced price range. So now we're looking at price from here up. And this is the latest expansion of this right here. So now we're demanding that it comes to at least a equilibrium or lower of this. Now, can it come back to the breaker? Yes, it can. But is there a reason, again, to come here? What's the likelihood to come here? Now, this is a monthly time frame, right? This is treetop tall. It ain't much to go above this besides looking up to a yearly time frame. All right. And this is a 12-month chart right here. Matter of fact, let's go to the continuous chart so we can see more price action. Right. This is a 12-month chart right here. And on a 12-month chart this year, we've come down into a bullish order block and we're getting discount sensitivity. Right. So now what's the likelihood that we continue back down here again? Right. Right here on the yearly chart, we're not showing a reason to need to come back down there right now. On the yearly chart, we've gone down to a discount PD rate and we're showing discount sensitivity. So for the bullish narrative on the yearly, we've expanded, come back to a discount, and we're showing discount sensitivity, and we're getting ready to close the year out. Right? We're in December. We've expanded, retraced, and we're showing discount sensitivity, getting ready to close out the year. All right. So the higher time frame is saying, I really ain't got no reason to go down there right now. Right. So now back on our monthly time frame, right? On our monthly time frame, right? So we're saying, okay, are we going to come back down here? right? Again, right? Let's go back and look at, right? See what I'm saying? Right. See, we that because this is where we are now. Are we gonna come back down here again and end the year negative? Right. So you start thinking about things like time and price. Historically, what has the NASDAQ done during a bullish year? What has NASDAQ done when we had a 15-20% retracement already in the beginning of the year? What has the NASDAQ done? This is when we start looking at seasonality, all the stuff on the higher time frames. What's the likelihood of price going back down there, right? And once we understand where we are in the sense of time, right? Now we start looking at what does price have aligned to stop us from getting there. And that's why now, right, we're watching that wick to see, hey, I'm not trying to force price back to this breaker, right? The buy program is intact. So now if I'm looking for a reason to buy, I'm looking for discount PD arrays in this range here. This is where I'm looking for buy. I'm not trying to force it down here because I'm trying to force it against what the higher time frame has already shown me. So now the higher time frame has shown me something. So now I'm just not going to assume that price is going to come back to this breaker. I'm going to look at, is there a reason to come here on the higher time frame? If there is, then on the lower time frames, I want to see failures of discount PD arrays that supports the idea that price wants to keep reaching down here. If there's no reason for it to come here on the higher time frame, I want to see discount PD arrays hold up, right? So now I'm looking, we're going to come here. So now, oh, I love when I get a chance to just touch back on the stuff that I already been harping on, right? So I'm gonna do this right here because this is our highest high, right? If you don't
Glad I
stop
could help.
if you don't stop interrupting me while I'm in my bag.
Sorry.
I'm just playing. You're welcome, right? So I'm gonna come here and I'm gonna come here. Then I'm gonna take these off, right? I'm taking those off, right? Why? Can somebody explain to me why I took those two candles off right there? Why did I take them two candles off? Somebody talk to me. Y'all know this now. Y'all better stop acting like y'all don't know this. Why did I take them two candles off? Somebody better say something. Ain't nobody gonna say nothing. Ain't nobody gonna say nothing.
You talking about the two candles from the other month?
Why did I just take them two candles off that I just took off? Once I ran my fib from that high to that low right there, why did I chop them other two candles off?
Because you came back into that range.
Nope.
Oh, because that was a change in state of delivery?
Nope. You overthinking it. Y'all stop thinking deep. What did I when we run our fibs? Say again.
So you could see it better?
Nope. When we
It
run
was
from
the
the high to the
expansion
low.
leg. Yeah.
that not that, but why did I take these off? Why did I take them off right there?
Because
right?
they weren't part of the expansion leg.
Yes, they wasn't part of the expansion leg, right? And this fib that we're running there from that high to that low, right? We're not running it because of that high and that low, right? That's just where we're anchoring it. We're anchoring it there because the algorithm has shown us something. It showed us that we're leaving a balanced price range in this case, right? So we're not anticipating price to go back down into there. So it's letting us know that's the low of our dealing range. That's the high of our dealing range, right? It's giving us our dealing range. Why are we drawing these quadrants on that dealing range. We're drawing it because what?
That's the expansion range, and that's the range we're still in.
Nope. Why are we drawing this dealing range? Why are we drawing this quadrants on this dealing range? These quadrants are what? Whoever drove a car. Who drove a car back in the day before Siri? Road maps. These quadrants are road maps to show you where high probability trading opportunities will form in the future because the algorithm established a dealing range, right? So when you mark out your dealing range, right, the highest high and lowest low, even if you come in and mark it out and there are candles already inside that range, right? Ignore everything that's inside of there, right? Until after you get this marked, and then highlight it so that it only includes everything after that high and that low for your studies, right? But when you're trading in real time, there's not going to be anything there anyway. That's why I got rid of those candles so that you can see what it looks like in real time. So in real time, this is what price is going to look like, right? This is what helps you to trust the process, because it's easy to just go back and see it over and over and over and over, but you have to start doing it in a way that says, hey, this is what it looks like in real time. So now this is a monthly chart, and then we go down to a daily chart, right? We go down to a daily chart, and now we see, right, this is what it would have looked like on a daily chart once that high and that low right there was made, right? Because if I come back over here and I get this and I drag that back over there, right, that's the low. All right, let me get it, make sure I get it right. 19. Okay, 19. Where was it? 19. Where is it? I can't find it. Just gonna do it like this. Wrong one. Why didn't that move? Oh, 203. All right. All right. Put it in the moon. All right. Okay. Over here somewhere. Right. The low is over here somewhere. Because these daily candles and the months be all mixed up. So this is how the monthly candle look. That'll be the low on the daily time frame. All right. So now we're gonna adjust it just so we can get a real low on the daily chart. Right. It's neither here nor there, just a little bit of the difference. Close enough for government work, but we want to pick a real low. All right. Now, looking at this, if you mark it like this on a higher time frame, you may be tricked into wanting to look at all of this price right here in relations to these lines, right? No. You don't want to do that, right? Only reason why you want to look at this price right here is for confluence of what happens on these lines. All right. What are you talking about? All right, let's go here. Put this on 300 right there so that none of that is intersecting. And then we're going to go back here and put the meat back on the bone. All right. And we come back here. All right. Open this out. Where are the high probability trading opportunities happening in this range right here? All right, where are they? They're happening on this roadmap, right? We coming down, right? When we come down here, right? When we come down here, we drop down and we sweep liquidity right there. And then we come back there and we're closing right there at that quadrant line, right? Closing that quadrant line. We trade back up here, create a BISI, right? And then we immediately create an inversion right there with a SIBI that's interacting with that quadrant line, right? Trade up into it, right? And we trade back down where? To the next quadrant line, taking out liquidity, right? So over here, what's the confluence here? We got bullish order block there that supports price. And then we got these BISIs that's becoming inversion fair value gaps, right? To support the idea of this new bearish fair value gap and this new inversion fair value gap to take price down, right? High probability confluence, right? So we come down here, right, to this quadrant level there, and we trade down below sell side liquidity right there, right? And then click there, right? We trade into a mitigation block right there, into a reclaimed fair value gap right there, right? We're sweeping liquidity here, right? We come down, sweep liquidity, a level that should support price, right? A level of fair value, a level of equilibrium, right? Fair price, equilibrium, support price, confluence, right? Bullish order block, bullish mitigation block, reclaimed fair value gap, confluence, right? And then this is the range we're looking at. So confluence there, right? And then this is inside that range, right? Confluence there, your order block, your mitigation block, right? Place to trade, confluence, all right? Then notice here, now we have this huge bullish order block right there, right? That's in between these two quadrants, right? So now at this time, at this point right here, you're looking for sensitivity in the wick, right? Why are you looking for sensitivity in the wick? Because when we come down to get a little V shape, sell side delivery, buy side delivery, trap traders. You don't want to see price digging into this balanced price range. So here you're looking for that discount sensitivity. Where's that bullish order block? It's intersecting with these quadrants, right? So you want to see the sensitivity here, understanding that this is the order block price. So you have to allow for it to come down there. Also resting down there is a suspension block, right? We have a suspension block that's resting down there. Okay. Another form of possible support, right? Another form of possible support, but you want to see, right, the bullish order block support price inside of the wick, because now we've come down and we've taken liquidity that's resting inside of this imbalance right here, traded back down, right? Taking liquidity. This bullish order block is in line with the quadrant level, right? I mean, this bullish fair value gap is in line with the quadrant level. This bullish order block is in line with the quadrant level. So for the bullish sentiment, you're looking for price to be supported right here. All right. Remember, we said the higher time frame on the yearly had showed that it came down. Right. Let's go back to our yearly. All right. I need to go back for a minute. All right. Remember, our yearly, we opened here, came down into a discount, And then we got discount sensitivity rallying us up, right? So in the sense of the power of three, we opened, traded down, and then we traded up. And then now we're backing off of the high. In the power of three, what is that? Accumulation, manipulation. Then we go and distribute above a high and back off of the high and close. Right. So in the sense of the power of three, right? What's the likelihood of us coming all the way back down here? Because we opened, went down, went up, and closing off the high. Right. For a bearish power of 3 year, you want to see us open, go up, come down, and close off the low. Okay, so you're always looking at things like what is going on in price. Does it make sense? Is there a reason for the higher time frame to come back to where I'm looking for price to come back to? All right. And then now that we've decided based off of what the algorithm is doing, right? There's no reason for the yearly to go back down there. So for the monthly time frame, I'm looking for the monthly to find support in the most recent discount PD arrays, the wick that we're watching. We're looking for the monthly to find support here because the yearly has no reason to go down there. So we pretty much demand that the monthly find support here because that will support the yearly narrative, right? We want to demand that the daily find support in this range. Now we see what we're looking for. The monthly to find support in. Now we want to find the weekly finding support. The weekly already came down, found support here. We talked about that. We got our discount sensitivity, right? And then we rallied up there, right? So now we want to see the same place where we want to see sensitivity on the daily, right? Is right there in this last down close candle on the weekly, right? It's right here in line with this bullish order block right here on the weekly, right? We're looking for the daily to find support here. The weekly, we're looking for that to find support, same area, right? Where's this line? Where's this quadrant? Intersecting with that order block, right? Intersecting with this potential order block, because once we offer that opening price right there, right? That's our change in the state of delivery on the weekly time frame. Right here, once we offer that opening price of the week of November the 3rd. All right. That's our weekly change in the state of delivery. So that's why I say this potential order block right there. We already got an order block over here on the weekly. We look for the support price. Why? Because we look for the daily to be supported right there, right? This is what we're demanding because the higher time frame is saying, hey, I ain't got no reason to go down there. So you want to see it fail. You want to see these succeed. You don't want to see these fail, right? You want this to act as support. This balanced price range here. You want to act as support. All right. Why is that? Because we expanded away from it, right? We cut straight through it, right? But when we got to the discount, we rallied back above it again, right? If price was bearish on the higher time frame, right, cutting straight through this, we should have used it as resistance to go down. But since the higher time frame needed to come here, right, we had to cut through this balanced price range to get down to where the higher time frame had to go, right? That's what we're talking about. Does the higher time frame have a reason to come back here? Same thing was looking at the breaker, right? When you're up here, does the higher time frame has a reason to come back down there, right? Since the higher time frame had a reason to come there, we cut through this balanced price range to where the higher time frame had to go, and then we immediately went back above it, right? So that's not bearish, that's bullish, right? We're back. So now you're looking for this to act as support, right? On the weekly, that aligns with what we're looking for on the daily, right? You're looking for the daily to act as support. And where are these things forming? It's forming on our roadmap right here inside of that dealing range. All right. That's just based off that dealing range. So now that we're all the way here in the future, right? We're right there where price is right now. Now we can go and look at things to help us with confluence on what if they're going to be looking at, right? So we come here, right? This is where we are now. come to this day there, click it, and we drag this back 20 days right here, right? We drag that back 20 days. And so put a line there, 20 days back, right? Going to make these solid lines and make them smaller now, right? Because that's our dealing range that we're in. All right. So now we're going to take this, and that's our highest high. And that there is our lowest low 20 days back. Right? Our highest high and our lowest low 20 days back right there. All right. So looking at our highest high and our lowest low 20 days back, when we look at this area here, right? We were saying that this was the area we do not want to see price coming down into, right? We do not want to see price coming down there just based off the fact that, right, this is like our balanced price range after we swept that and we traded back above, right, that high right there. Okay. So we don't want to see price digging too deep down into there right now. Just looking at our 20-day look back, right, on a 20-day look back, coming down to equilibrium will bring us down to that suspension block, right? It will bring us down to the order block, right? If price wanted to do that, so be it. That's within the range of our highest high and lowest low of our 20-day look back, right? But we also, if you look at, right, this is when we start leaving out right there, right? Coming here, we came up, closed there, and this is when we started to leave. This is when we actually left, right? That's when we actually left right there, right? Start to leave, lowest low, actually left. All right. So now we've come all the way down. We're in a discount already, right? So, and we've already taken out a low, right? So if the algorithm decides to respect the range that we're in, price could very well rally from here, right? But even if it doesn't rally from here, right, remember, this brings us down into a discount of our 20-day look back, right, to continue the bullish order flow based off of every time frame from the monthly on down, where we're looking for price to be supported at, right? We're looking for price to be supported at, and that's all based off of what the algorithm has shown us, right? That we've seen on every level, the algorithm not showing a desire to want to keep going lower right now, right? It's not showing a desire to want to keep going lower, from the yearly to the monthly to the weekly to the daily, right? And so now as you get down into the daily time frames, that's when you can start to look at your if the look back, along with if your if the look back is separate from your dealing range, right? If your IPTA look back, like this is our dealing range and this is our 20-day look back on IPTA, right? That's our dealing range and that's our 20-day look back. Okay. So if they're different, then what do? You look for confluences for high probability PD arrays. All right. So for our, let me make this just a fat solid line. All right. So the thick blue line is our upper quadrant of our dealer range. The dotted line is our upper quadrant of our 20-day look back, right? So looking back, right, for 20 days, right? Remember we said This way is for our high probability setups. This way is for our confluence, right? So at our equilibrium of our 20-day look back, right, we have a bullish order block, right? We have another bullish order block, right? So this bullish order block, that bullish order block, right? We got order blocks there, right? This bullish order block contains our change in the state of delivery, right? It's in conjunction with a quadrant for our dealing range. It's in conjunction with a quadrant for our 20-day look back, right? Both of the order blocks, right? So they're both looking back. So when IPTA looks back, is looking for liquidity, is looking for PD arrays, is looking for imbalances, right? Our 20-day look back here, right? We have a BISI, right? That's in conjunction with our 20-day look back, is in conjunction with our dealing range. Now, this was created in conjunction with our dealing range. So it was somewhere where a high probability trading setup was being formed. And we see that right there, right? There was a buy off of that right there. Because remember, we started looking for trading opportunities here forward. Got a BISI right there, buy off of that BISI, price went up, took out that high right there. So bought off the BISI, expanded up, took out the high, right? So we've taken out the high, then we've come back down and taken out the low, right? So when you take out a high, then come back down and take out a low, right? That doesn't invalidate the buy program. What are you looking for now? To get a wig snatcher set up by coming back up and taking out that high again. Because when we come up and take our buy side, right, and we don't show a willingness to continue up, we look for a trading opportunity back into the opposite end of the range. Because why? It's going to go get liquidity as rocket fuel to continue back up. Same thing when we look at the pre-market. If we interact with the pre-market high, don't show a willingness to continue, we look for opportunity to go back to the pre-market low to get liquidity, because the pre-market low most of the time is not going to invalidate the buy program, because the daily low is probably going to be down here somewhere, right? It's not going to validate the buy program by going and getting that sell side liquidity to continue up. Okay, same thing here. We've come back down into the discount, into our area that we're anticipating to act as support, and we're seeing discount sensitivity at that low, right? And we traded back down right here. Nope, we didn't quite get there into the I was trying to see if we had got down into that gap right there, but we didn't, right? And as you see, we came down just below consequent encroachment of the wick of that order block, right? And we closed back above that high. Like I said, we starting to show discount sensitivity. So 20-day look back, right? You're looking for confluence on you're looking for high probability PD arrays on these lines, right? These are the PD arrays you're looking at. How does price react when we get there? Because you're looking back, right? This is your confluence over there. And then as you move to the future, you're looking for things to set up on these quadrants for you to take buying opportunities for a buy program, selling opportunities, or sell programs. And remember, your highest probability of trades is going to happen within that area there, from the upper quadrant to the lower quadrant. That's where the highest probability setups are going to form. All right. Makes sense to everybody. And then you just go down in time, right? You just go down in time, the same thing. Now, all of this has happened, right? Everything that even like on the intraday time frame, now all of this has happened now. So now what are you doing? You're still looking for your opportunities, right? in these areas here, these quadrant levels. Don't nothing change about it, right? Don't nothing change about it. Because now we just set this 20-day look back right now. So if you're coming into price right now, this is the 20-day look back range that you're looking right now in conjunction with the current dealing range that we're in right now, right? If you're starting fresh right now, this is what you're looking at, right? This is the lowest low and the highest high, right? That you're looking at right now based off what price is doing. And on this intraday time frame, what do we have? Relative equal highs up here, right? We are on the right side of a market maker buy model. That's from up here, right? And that's at the high of our dealing range, right? We see here, we're on the right side of a market maker buy model, right? And if we look at the highest high and lowest low based off of this dealing range right here, right? This bearish dealing range, right? Highest high, lowest low from that bearish dealing range. Look like we may be in a slight premium, maybe. Might be equilibrium. Let's see. Right at equilibrium. Right? We're right at equilibrium of this bearish dealing range that we created right there. So even if you're trading just based off of the dealing range that you're in right now, right? As far as from here to there, right? That's the highest high, lowest low based off of where we are here. This over here was based off of this range on this side, right? So looking at this range on this side, we would look for reasons to trade in the future, right? And that's from there to there, right? Now going from here to here, right? Right? You're looking for reasons to trade from here forward, right? So you look for reasons to trade from here forward after your smart money reversal, right? After your smart money reversal, because that's the range from there to there, right? So no matter where you pick up at price, as long as you're starting from an algorithm point, right? As long as you're starting from an rhythm point, there will always, and I repeat, there will always, right, be a reason to trade, right? Be a reason to trade at these quadrant levels, right? There will always be a reason to trade at these quadrant levels as long as you, right? As long as you are trading from you're anchoring. I got too much stuff going on over here. One down. No down. Okay. What is that? Oh, it's my 20-day look back. All right, that's my 20-day look back line I drew. All right. There were always, right, quadrant to quadrant to quadrant, right? There were always from quadrant up expansion to quadrant, pause, right? To quadrant, pause, back to quadrant. There will always be reasons to trade at these quadrants, right? Or always be reasons to trade at these quadrants. Like I say over there, right? Look here. Let's go down to the lower call. We say your trading opportunities are going to be, right? This is where your trading opportunities are going to reside, right? We trading opportunities are going to reside. All right. You can see it. You can see it. Y'all can see it, right? So come here, right? Trade up there, right? What do we have here, right? That's a bullish order block. in conjunction with that lower quadrant right there. All right, we're trading here, right? Then we set up another order block, right? That trades down into that inversion fair value gap right there, right? Where's it all set up at? That quadrant right there, right? We take off. When we take off, right, what do we form right there? A BISI that's in conjunction with that quadrant. Where's that BISI being formed at, right? That BISI is being formed as we leave a balanced price range, right? That BISI this is a balanced price range. We leave that balanced price range. That BISI is being formed as we leave that balanced price range. It's in conjunction with that lower quadrant, trade down into that BISI. That's in conjunction with that lower quadrant, right? And then we rally up and go all the way back up to equilibrium, right? Go back to the next quadrant level, okay? Then as we go back to the next quadrant level, right? If we look here, right, if we look back over here, right, into this area there, as we get above this bullish order block, and then this breaker over here, go up, go down, get into that breaker right there, right? We use that area there to push us up into those relative equal highs right there that was formed. So we create these relative equal highs, and we come down and we use this bullish breaker that's in line with that equilibrium to push us up into that. Then we drop back down, right? Once we drop back down there, right, we sweep liquidity, and then we continue, right? Continue up, right? What we trade down into, we trade down into a bullish order block that's resting where? Right there on that quadrant right there, right? Bullish order block right there at that quadrant, all right? Then we trade back up and go into the upper quadrant, right? Once we come up there to the upper quadrant there, now we sit here, we engineer all of these relative equal highs there. Then we drop down and we come back down. Now we're right here at equilibrium again, right? We're right here at equilibrium again. So now that we're at equilibrium again, coming from this upper quadrant, right? One or two things can happen. If we got high resistance, right? If we got high resistance, right, we can come all the way back down to the lower quadrant. Why? Because when we get to that upper quadrant, we often anticipate a deeper retracement that will take us back to the lower quadrant, and vice versa. We get to that lower quadrant, we anticipate a deeper retracement that can take us back to the upper quadrant, and that's based off of high resistance. But if it's not high resistance, right, we want to see our anticipatory reactionary points support price with extreme discount sensitivity, right? And that's resting right there at that equilibrium level. That's a quadrant level right there. There is sell side liquidity resting down here that can get swept, right, and respect the lower quadrant, right? And we got PD arrays down here that can get traded to. But like I say, for low resistance, we want to see extreme discount sensitivity to trade back up into these relative equal highs that's being generated up in here now that we're on the right side of this market maker model. Right? So it matters not how low you go, right? As long as you got the understanding of your dealing range and your look back and all of that, and you running your fibs based off these algorithmic principles, you can align yourself with the high probability PD rates you need to be paying attention to and what you need to be watching, right? And that goes all the way back to our first thing about, is there a reason for price to come back down? What we was at? What was on the monthly chart? What chart we was on? The monthly, the weekly? What chart we was on? We started talking about a breaker. Was it daily? It was by the 2025, and it was like she was like, I anticipated to come back to that break. What were we on? I can't remember.
What was the monthly?
It was the monthly time frame.
Yep.
Here. Yeah, that
Yep.
one right there. Right there. Okay. So now, with that being said, I'm gonna put a line right there. Matter of fact, I'm put it here because this is when this month closed, right? So now that candle actually exists, right? And then we're gonna go back to a daily time frame. All right. So on a daily time frame, where did it go? Let's go back to the monthly. And we're going to show this on all time frames. Now we'll go back to the daily. Okay. That's that right there. Right. From today. Right. Well, price stop trading on Friday. Right. So we come now on Friday. So we'll come to today. Right. And we'll click right there. That is 218 days away. 218 days away. IPTA looks back 20, 40, and 60. If it's outside of the 20, 40, and 60, we shouldn't even have it on our radar. That's for like way out, like, okay, once I pick my PD arrays, that what they call them, POIs, I think they call them points of interest. Is it like POI? Do they call it POIs? POIs, I think. You only want to pick your points of interest or POIs or whatever they call them within the 20, 40, and 60-day look back. If you a day trader, you want to focus on the 20-day look back, right? That's where you want to focus at. That's where you want to be making all of your decisions during that 20-day look back, right? If you want to be very in tuned as a day trader, you want to understand what's going on in the 20, 40, and 60-day look back, right? So that you will be highly informed of what the higher time frame is reaching for, what the higher time frame is doing. You're not so just zoomed in on a 20 that you're looking for something to happen bearishly because of a 20-day look back, but you don't know that the 60-day has already made a retracement to a discount and we're ready to go back up now. You know what I'm saying? So you don't want to stay zoomed in. You always want to start from the top down, right? Where am I in my 60-day look back? Where am I in my 40-day look back? Where am I in my 20-day look back? My 20-day look back is where I'm finding my key PD arrays based off of what I want to trade on a day trading basis. But I'm making my decisions based off of where are we from the higher time frame, right? You don't never want to put all your eggs in one basket. You want everything to be from a top-down perspective. Okay. So when looking at key PD arrays, I don't care what you think, you want to think like smart money. 20, 40, 60 days back, dealing ranges, buy programs, sell programs, market maker models, right? Where are you in all of these things and go from there. Right. Y'all done got me running my mouth and I ain't updating that chart. Hey.
Thanks for asking that question, Michelle. We got us a whole good lesson out of that one. I learned a lot. Tim, I'm gonna holler at you. I'm gonna go, man.
All right, then. Love you.
All right, love you too.
Bye.
Thanks again, Michelle.
Glad I can help.
All right. Yeah. Yeah, man. I'm tired now. I ain't updating no charts till later. I see somebody said something. I don't know when they said at 319. Oh, that's a long time ago. JT South Miami. You still in here on the hourly time frame? Why wouldn't we say we're on the right side of a market maker sell model? I know we might be. I don't know. I don't know. Are we? We might be. On the hourly time frame? Nah, man. We're on the right side of a market maker buy model. Now, if you're talking like real short term, right, if you're talking real short term, right, you basically already like pretty much did that. But Now we're on the right side of a market maker buy model, right? Because this is your smart money reversal down here, right? We reverse there. Smart money reversal is always going to happen below a low or above a high, right? You got different, yeah, because we are in a market maker buy model. Market maker buy model. All right. Okay. This is a smart money reversal. This is the low risk buy. Right. We're on the right side of a market maker buy model. Right. Where we are now, right here, right. We're not on the right side of a market maker sell model because this is the market maker sell model here. We've completed that model. Right here, went back here. We was on the right side of a market maker sell model. Right. And we came up, we came down, and we completed that, and we had a smart money reversal below a low. So now we're like sell models connect. Sell model, buy model. They overlap. It's like you don't complete a sell model and then go over here and then start a buy model. No, it go from sell model, buy model. They overlap. The left side of a market maker sell model. Oh, I'm sorry. The right side of a market maker sell model is the left side of the market maker buy model, right? Like as you're coming down, completing a market maker sell model, you're looking to go below a low, and this downtrend be the left side of a market maker buy model, right?
Maybe he was thinking that those highs around November, what is that, 11th, 12th, something like that was the
Yeah, he said somebody he was
was
focusing
the
on a
top.
little dip. He said he was focusing on a recent little dip, like over here, right? And that even if you're looking at that little dip right there, right, on this hourly time frame, right, you don't have a smart money reversal anywhere. That's just like a pullback. If anything, you would be looking for this to become like offset accumulation, because we're accumulating, then we drop below the lows. So you were just look for this to become offset accumulation to go up.
I have no idea.
All right. I ain't got no idea either.
I think they're a team in Houston.
Yeah,
but
yeah, they in Houston or something. Might be, if it ain't Houston, it might be Dallas. The mute is undefeated. All right, man. That's all I got. Appreciate y'all for hanging out with me. We did not get to any chart prep, but y'all already know. Go through, pick out your lows and your highs, look and see if there's any key PD arrays on the daily time frame that you want to focus on. And then wait until price open up tonight at 6 o'clock. I appreciate y'all for hanging out with me. If this was your first time tuning in to Tim's Tidbits, you probably not even here no more. But if you are, hey man, thanks for hanging out. First description in the first link in the description below, Smart Money Manuscript, $69.99. Third link in the description below, Apex. Use my affiliate code. They got 90% off right now to the 16th. If you do not pass before the 16th, the activation fee will be whatever the activation fee usually is, right? The way the activation fee, them discounted activation fees, they're only good during the window of the sale, right? It don't matter when you buy the eval. If they're having an activation fee sale and you're in that window, you would get that activation fee. But when you get outside of that sale window, the activation fee is regular or whatever it is. Now, whatever the eval cost is, that's in perpetuity. Like right now, they got 90% off the first month and 50% off each additional month if it take you longer than 30 days to pass it. But if you pass it before the 16th, you can pay $65 for the activation fee for 100K or lower, right? Meaning that you will be $84.90 all in for your funded account. And again, shout out to all the gang that's been funded. Shout out to the gang that's been taking payouts. And shout out to everybody that's on their way there and still doing the work. Yeah, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That just means big spot if you don't hablo español. Y'all be safe out here in these trading streets. Oh, wait a minute. Gang. I got to show y'all my baby. My baby graduated yesterday. I almost forgot to do my proud papa moment. How y'all let me forget to do my proud papa moment? Man, I ain't fooling with y'all no man. I ain't fooling with y'all no more. I'll get on my nerve. Got me out there forgetting to do my proud papa moment. There go me and my baby. See, that's us on the backdrop. Yeah. Chris had auditions for on district honor band, so he couldn't go. So it was just me and Timothy there. There's a million pictures in here. You know what? Let me go to the ones that I text where I can just get the ones that I want. Family. There you go. All right. There you go. Let me see here. More. Share. It's not letting Discord come up. Now I got to go. I just pick them out one at a time. I'm about to go in and pick them out. Y'all hold on. Everybody else, y'all free to go, man. Stay safe out in the same streets. Gone. Yeah. All right. If y'all want to see my baby pictures, stay. If you don't want to see my baby pictures, go. That's all my babies. Besides, minus Chris. Julian, sister. Anna, mama. Yeah. And then, just me and her. And then just her by herself. Yeah. Then I just do the bouquet. All right. Okay, now let me open this right here. So, let me share this right here. Screen. What's in Discord? All right. Main chat. There you go. Okay. So, as y'all see, it says psych major. Okay. There you go. It says psyched. That's like a lady in the Savannah made that. I was like, oh, that was nice. It's like a bunch of roses, and she put like these little flower thing. They was like pinned in. It said like psyched because she a psych major. All right. Then that's her with a little bouquet, Jada Monet. All right. And then that's me and her right there on the backdrop. But we was fighting for position on the backdrop. There's her and her mama and Maya. This is the youngest. Well, Chris, the youngest. So she's 27. She's 25. Timothy, 18. And Christopher, 16. All right. And that's their mama right there. and then that's her and her mama. Then that's her and Junior, and then that's all of them together minus Chris, right? And then that's it. Oh, my babies. After many, many long years of, because when she first started going to school, when she graduated, she went to Bethune-Cookman College, and she was going full time for like one semester. She hated it down there, probably missing home, whatever. Then she came back to Georgia Southern. And I think she did like a full ride when she got back for like the first semester. Then after that, she was just going like part-time. She was just doing like part-time. But now she found, after many months and years of sacrifice and going part-time. Y'all know how it is when you're trying to work and go to school at the same time. It'd be rough, but she finally made it through. And she got her bachelor's in psychology after many part-time semesters. But them part-time semesters be the hardest. I don't know if y'all ever went to school, but when you be going to school part-time, it take forever. You be like, man, this thing taking forever. But she did it, and I'm very, very proud. Very, very proud. All right, man. That was my proud dad moment. I appreciate y'all for sticking around, hanging out with me so I can share my proud dad moment. And yes, she is the oldest, but she is the runt of the litter. She's the oldest, but she's the runt of the litter. Tasha, tell my dog Snoopy I said. All right, man. I appreciate y'all for hanging out again. Tomorrow is Monday. I'll do a pre-market analysis. You know what? Since Michelle pulled up with the hard-hitting question and got me in my bag, I'm going to do a pre-market analysis with the whole gang tomorrow. So I'll do it in the I Stay Popped Up channel. No, the pre-market analysis are not recorded. But if you want to join us for the pre-market analysis, pull up inside the I Stay Popped Up channel around 9ish a.m. I usually try to start at 9 o'clock, but depending on how the adventures of Super Dad going in the morning with getting Chris to school, pull up around 9ish. All right. All right, man. I'll see y'all in the morning. Y'all enjoy the rest of y'all weekend. Enjoy the rest of y'all Sunday. I got to go in here. I started lunching when I got home from service, and I still haven't done anything because I've been back here with y'all. So now I got to go put my stuff in the dryer, then put my other load in the washer, and then I should be done right now. Y'all holding me up. You see what I'm saying? Y'all holding me up right now. All right, man. I'll see y'all in the morning. Y'all be safe. I hate these straight streets. I'm gone. Yeah.